Hello everybody, I believe that we have started and I hope you can hear us fine. I'm asking a little bit of confirmation if that is good on your side because we can't hear I would say the WebEx ourselves. I would first of all like to ask you to mute your own audio just to make sure that we indeed don't get feedback centrally. We're figuring out the best camera angles to do this WebEx here. We're in the offices of White & Case, a law firm specialized in fintechs and helping fintechs amongst others, and especially they have a practice that helps those involved with crypto assets. And that's the topic of the day. We're going to talk about the famous MiCA regulation, which is the Markets in Crypto Assets regulation. That's an upcoming regulation. And without further ado, I want to thank White & Case that we can use this great infrastructure at their headquarters in Brussels to hold this meetup. There is a nice interactive part that will follow the primary introduction, and I would start with the questions which will be answered by both Willem and Eileen from White & Case. Tell us something about the background of this new EU regulation. What is MiCA about?
Okay, thank you, Tom. The background of the regulation is, in fact, it's part of the digital finance package that was announced by the European Commission in September 2020, so at the end of last year. The digital finance package is in fact a broader package that has as aim to stimulate competition, innovation within Europe, but also at the same time consumer protection and financial stability. There's a more global ambition according to the proposal to make in fact rules that allow to stimulate innovation and to make Europe an important player in digital finance. The digital finance package consists of basically a number of elements. On the one hand, there's a broader digital finance strategy that, for example, aims at removing barriers in the single market, that aims at stimulating a digital data-driven finance, and that also aims to stimulate digital resilience, because what this COVID period has certainly shown is that we are very dependent on IT infrastructure, but also the risks of cyber attacks. So basically, MiCA is a part of this broader digital finance package and is a proposal that aims to cover assets, crypto assets that are currently not covered by financial regulation. On the other hand, there's a second part of the regulation that is in fact aiming to introduce a kind of pilot regime for market infrastructures that will stimulate experiments using blockchain technology in the sphere of instruments that currently are already a part of the existing financial regulation. So that it's part of a broader strategy that, for example, also wants to stimulate retail payments and so on. But it's part of that package, but something very new.
Okay, thanks for that introduction. And for those who have not activated the chat part, if you want to have a nice screen and follow the way that we are filming it from the headquarters of White & Case, you can go to the layout button in the right top of your screen and choose for the stage layout. That way you get I would say the best view, and you can combine that with the chat in the right side. So apart from those practicalities, I would like to ask, which type of crypto assets are covered by this proposed new regime? Like, is everything covered? Is everything covered under there? How deep do they go, and what does it cover?
Yes, I think what is interesting about the proposal and the proposed approach is that it takes a very broad sweep, a very broad definition. The definition, in fact, refers to everything that is a digital representation of value or rights that can be transferred or stored electronically, either using blockchain technology or any kind of similar technology. So it's a very broad definition that would basically cover almost all types of crypto assets. The definition is inspired by the definition that is part of the recommendations of the Financial Task Force around AML, that has, for virtual assets in the context of anti-money laundering, introduced a similar concept. Although I think there's one limited difference. The definition of the task force still refers to an element of the using of virtual assets for payment or investment purposes. That's an element that you do not have in the definition of crypto assets under MiCA, that basically covers all types of crypto assets and, for example, also utility tokens. The discussion about the proposal says that the idea was to have a very broad definition. For example, not to work with a taxonomy or specific categories, very detailed categories of instruments within or out of scope, because the idea is really to cover everything that is not covered by existing regulation, existing financial regulation. What is important is that even though there's this very broad definition, there are a number of subcategories. On the one hand, there are the asset reference tokens. These are basically stable coins, so coins that link to a fiat currency, but that can also link to commodities or other types of assets, so asset reference tokens. The only caveat there, what doesn't fall within the definition of asset reference tokens are the so-called algorithmic stablecoins. Algorithmic stablecoins are coins that are not linked to any underlying commodity or any underlying fiat currency, but that have a kind of algorithm that they are using via protocol to increase or to limit supply and so on. So these type of assets can fall under the general definition of crypto assets, but will not follow under this specific category. There is another category of e-money tokens. E-money tokens are tokens that link to a fiat currency, so to euro or another type of currency, and that are being developed for payment purposes. And then there are the utility tokens. So those are specific categories of stablecoin, or specific categories of crypto assets that fall within scope, but it's a subcategory of the more general category. The only thing what is excluded from the very general definition of crypto assets are basically those assets that are already subject to existing financial regulation, and there the most important category are the MiFID II financial instruments. So if you would have a share that is traded on a stock exchange, a bond that is traded on a stock exchange, emission allowance, other type of instruments that are subject to existing financial regulation, those instruments will remain subject to that existing financial regulation, regardless of the use of the underlying technology. And MiFID II will include a clarification to say that regardless of the underlying technology that is being used to create, store, transfer those instruments, they will follow within the scope of the existing, they will remain within the scope of this existing financial regulation. So it's really to plug a kind of gap for instruments, assets that were currently not yet subject to a harmonized European regulation.
Okay, and what is the regulatory approach? Like, what type of regulation can we expect from this? Like, it's all in the making, there's been hearings, so like, can you enlighten us on that part?
Yes. In terms of the approach, that is maybe first, and Eline will comment a bit more later in detail on the status of this proposal. It's currently a draft that is being presented by the European Commission, so everything is a draft and everything is still subject to change. The idea and the general approach that has been taken or that is proposed by the Commission is to have a specific tailor-made regulation for crypto assets that do not fall within the scope of the existing regulation. So rather than amending the existing financial regulation to apply it to crypto assets, which could have been a potential approach, the idea is to develop a whole new set of regulation, hence this MiCA regulation at a harmonized European level, that will deal with these type of crypto assets. So tailor-made, although we will see that in fact a lot of the concepts are borrowed from existing financial regulation, but then are applied in a way that is considered as more proportionate and more appropriate to these type of specific assets. And the idea is to have different points of entry, different elements to apply the regulation. Either the issuers of crypto assets will be subject to regulation when they offer crypto assets. Service providers, for example, custodians who will offer to hold the crypto assets as intermediaries, will become subject to regulation. And then there will be a number of elements where there are, for example, issuers that will be considered as more significant, that will be subject to a stricter and more stringent regulation. The goal of the regulation is really to balance, on the one hand, innovation, because the Commission recognizes that these type of assets, this new technology presents opportunities, and that if there is no clear legal framework in Europe, if there is no legal certainty, this market will not develop in a good manner. But at the same time, there is concern around consumer protection. People that will follow Twitter and will start to buy instruments, the Commission feels there's a level of consumer protection that you need for these instruments, just as you need for financial instruments. And on the other hand, financial stability, a recognition that maybe some stable coins will become so important that there will be a link to the rest of the financial system, and so that you need to intervene with specific requirements.
Okay, our next speakers are going to go more into the applicability of crypto assets, but how will issuers be impacted by this? You already referred to that earlier on. Yeah. How heavy will this regulation be for them?
It will really depend on the type of asset. So that is the element around proportionality. If you will just offer a utility token that is not linked to a specific asset, that is also not constituting e-money, then you will basically be subject to a rather light regulation that can be compared to a regime, for example, that is in place for ICOs in France, where the main rules are really around disclosure. You will need to prepare a white paper, and that's inspired a bit by the prospectus regulation. So you will need to prepare a rather simple disclosure. You will have to notify that disclosure to a national competent authority. You will need to make sure that you publish that disclosure. But for example, you will not be required to be established in Europe. You can, as long as you comply with the disclosure requirements, and as long as you comply with a number of basic rules around disclosure, you will not be subject to a very strict regulation. On the other hand, if you will issue asset reference tokens, so if tomorrow you want to issue a token that is connected to gold or platinum, or you want to participate in all the speculation around silver and offer a silver-linked token, then you will be subject to the requirement to have an establishment in Europe, and you will have a requirement to be subject to an authorization. You will need to go to a national competent authority, and you will need to demonstrate, for example, that you do certain audits on the assets that are linked to the token, that you have certain governance arrangements in place. You will need to publish disclosures. Do you actually hold the gold, for example, that is backing up your token? There will be rules around reserves. So for this type of assets, and even more if you are considered as a significant issuer, because you have a very large stock, for example, of gold that is backing up your tokens, then the regulation will even go further, and you will be subject to even more regulations.
Okay.
It's similar for the e-money tokens, for example. There is a specific regime there.
And how do you define significant? Because it's a very relative term, of course.
Yes, as significance will be linked, for example, to the number of coins in circulation, the number of countries where the coins can be in circulation, the size of the issuance and so on. And for example, the link with the financial system, are banks also holding these instruments and so on. So it will be any kind of ad hoc assessment.
Okay, maybe for the people who are envisioning to become a service provider, what type of services will be called and covered under this regulation?
Basically, in terms of services that are covered, it's very much inspired by MiFID. Okay. So it will be services like providing advice, providing assistance with trading, providing custody and so on. So also placing of the token, like intervening as a kind of underwriter and helping to place the token into the market.
So it means you'll have the same type of questionnaires that they will have to send to private individuals who are not professional investors to show that they understand what they're doing?
Yes, that is right, but with one nuance, and I think a point of critique. There is no concept around client categorization. Okay. There are a few elements where you, for example, have a safe harbor if you only offer instruments to qualified investors, but there is no general concept of client categorization under MiCA, and that's maybe something that may be worth considering in the next iteration of the draft.
I see in the presence list of WebEx that we have some current licensed financial institutions, people working there. What's the impact for them?
Yes, I think in terms of impact for them, what will be very important is that they will have certain possibilities to, instead of asking a full new authorization, to also offer some of these services with respect to crypto assets. So I think they will really need to start asking strategic questions as, is this a market we will also want to go on? How can we leverage the knowledge we have of procedures in the existing financial sector? And for example, how do we also work together with new players that are coming to this market, and how do we form partnerships? So a question I think that has always been very relevant in fintech will become very relevant for them.
Okay, we had a question, you partly answered it already, the difference between the providers towards professional investors and retail investors. You say there's not a very strict difference there. Can you give a little bit more detail about it?
Yes, what you have, for example, is if you have very strict rules around e-money, but there are certain safe harbors if you only offer the e-money to qualified investors. If you, for example, want to create a token in the context of certain settlement systems between professional investors, then you could be subject to some lighter regime. But there is no general concept of, for example, you can offer custody of crypto assets to professional investors without a license, and you can offer it to retail consumers with a license. And this distinction will not be there.
Okay, and Willem Lambrechts was asking through the chat, he was talking specifically about security tokens. So that's, well, you just...
Yes, I think about the security tokens, maybe to mention one point there, I think, and that's also an element of discussion, a lot of security tokens will likely remain within MiFID II. And there, I think, and that's a point about the possible lack of harmonization. That's something that may need further clarification. Okay. What is in scope of MiFID and what is in scope, out of scope of MiFID, and then potentially still in scope of MiCA.
Okay, great. We'll move on also to respect the timing. We have another question about the timing, how long it will take actually for these procedures, and if there's a template for that. But they're going to be covered in the next part of our talk, so stay tuned for that. Because what is the proposed timing that you know about? When will this all come into effect? And maybe Eileen, you want to give us more, share us a little bit more about your expectation when everybody is going to have to adhere to these new rules.
Yeah, sure. So as already mentioned by Willem, everything we're discussing here is still in draft form. The proposal has been adopted by the European Commission in September 2020 and has now moved from the draft proposal stage to the European legislative process of the European Parliament and the Council. So the draft or the proposal is currently being reviewed by the Parliament and the Council in first reading. The problem is that first reading is not subject to any time limitations, so it's difficult for us to say when the Parliament or the Council will share their feedback on the proposal.
Yeah.
If they do not accept the proposal in first reading, it can go to second reading, which can last up to 4 months, and it can even go into third reading, which can last up to 8 weeks. So it could take up to 1 or 2 or even more years for the proposal to be formally adopted. What we think we should take into account for the first reading is that we do not yet know how much political discussion there will be around the proposal. The longer it takes, markets will evolve, technology will keep evolving, so the proposal may still be changed to include these evolvements. The aim of the Commission is to have everything finalized by 2024.
Okay.
So that's to be seen.
And what's the general perception on this proposal? Because you have your customers who are asking and you're giving you feedback, you're informing them about the latest state of play. But what are they telling you? How did they see this new MiCA regulation?
Mm-hmm. I think on the one hand it's something that is welcome because it will give legal certainty and much clearer rules around a number of things. I think where there is a level of concern is that some of the rules may not necessarily already be very clear or proportionate for certain new projects that are being developed. So I think that is a concern. And then also I think there is the element of the devil may be in the detail. I think the question around security tokens is an illustration of that. There's this friction that you have inevitably with European regulation that harmonizes. It helps, for example, the passport for service providers is something that would be very welcome. But on the other hand, there are still a lot of matters that risk being subject to either national legislation or diverging interpretation by national legislators. So I think on the one hand, it's welcomed because it creates a framework, it can gives a better, from a reputational point of view, sometimes being regulated can give an advantage. But the devil, I think, will be in the detail around implementation.
Okay. Now, there's been a consultation by the European Commission. Can you give us some color about what came out of that? Like, how many comments were there and what direction did they go?
Yeah, sure. So we know that the Commission has consulted several stakeholders as when they were preparing the proposal. They did an open public consultation. They consulted member state experts in the expert group on banking, payments and insurance. We don't have that much time to discuss this all in depth, but we would leave it to one of the next speakers, Laura, as she with UROC has provided responses as part of the public open consultation of the European Commission. So that will be for the next.
Okay. Now, will this proposed regulation realize a full harmonization of those EU crypto assets regulation? Will there be like room for national regulation, in the worst case gold plating? Eh? So in fintech we've been used to gold plating for many years, where the newcomers had to adhere to the same very strict rules that maybe a large bank had huge departments in KYC or customer due diligence processes, and that a new small player would have to have those same very strict rules, although they didn't have systemic risk. Is this same concept of gold plating being copied into the crypto assets markets? Is that something you see happening? And can national regulators go further than this MiCA regulation?
Mm-hmm. That's maybe to comment on that, and yes. I think that ties in with the previous comments also a bit. The goal is very clearly to have a harmonization, to have one regime, a passport, across the European Union for service providers, a possibility to offer your tokens across Europe based on a document that you will notify with one national regulator. I think that where there is a risk is, for example, will there be diverging interpretation of consumer protection if you start to advertise? Will there be specific rules around contract law, evidence, and so on? Or, for example, are there specific rules around how do you create an instrument on blockchain around evidence, contract law, what is the legal framework, and so on. Because the focus of MiCA is really from a financial regulation point of view, but real life is more complicated, and you cannot really put it in one of the silos of regulations that are proposed at the European level. So we should hope that there will be also coordination between the EU regulators, but that remains to be seen.
Okay, super interesting answer, especially given that in this room, and Caroline, if you zoom out to the room, you can see one of our next speakers is Marc Toledo from Bit4You. I've seen him in the newspaper advertising his company, so just broadsheet daily newspapers. So we now understand there's no rules about that yet. You can do it, and you can continue to do it for at least 2 years until this regulation will be there. So it does impact us today. Huh? So this to show you that in this room we have people advertising in a today unregulated or not clearly regulated way their services. We'll come to that later on. We have 3 more questions for White and Case, and then we're going to move on to our next speakers. So what do you expect the international impact of these EU regulations? Because it's a global movement, especially this week. It's a very hot topic also in those broad media advertising. How will this affect non-EU companies?
Yes, I think for non-EU companies, the similar concerns around financial regulation that exist before will continue to apply. So as soon as you offer your instrument on the European market, you will likely be touched by the regulation. There is, for example, you may be able to offer a utility token without an establishment in Europe, but if you want to offer e-money tokens, for example, or stable coins, you will likely have to have a European authorization. And you may be able to, for example, say, I do not actively target a market, if you don't make advertisements in the newspaper and so on, and you more just accept an inquiry from outside outside of Europe, you accept a European inquiry, you may be able to still do certain things, but it will have a very broad scope, certainly.
Okay, so it will likely be like GDPR. At the beginning of it, you went to an American news site and they would say, we do not serve your region, to put it mildly. We do not serve our ad tech to European consumers because we cannot comply with those rules at this point in time, or we don't want to comply with those rules at this point in time. So it's going to be similar, you think, with crypto assets. You're calling them from an EU IP address and they will say, no, we don't get into those complexities that this MiCA regulations is enforcing upon us.
I think it will depend on how aggressive or how conservative the approach is. Certain people will take, but that's a risk that you get a certain fragmentation.
We have a question from an online attendant. So Michael Schilik is asking, issuers have to be legal persons today. Does it mean that DeFi, maybe explain what DeFi providers are, that they have to incorporate or fall outside of the scope? How do you see that? And maybe first talk about what a DeFi provider is.
Yes. I think that's a very good question and observation that has been made in respect of the regulation. So the idea is indeed that you can have a kind of a peer-to-peer network where there is no central issuer, but a kind of unincorporated group of persons that would administer, for example, a token, an organization, a bit like the autonomous organizations. I think, to be honest, and there may be people participating who have a clearer idea about that is not clearly addressed. You could say is you have to be incorporated, otherwise you cannot comply, or you could try to make an argument that actually it's out of scope. So I think an interesting legal question to be addressed.
Okay, and this is raising a lot of new questions. We have Sinoe who says that we have like a Pancake Swap, which is a fork of Uniswap, but Binance is behind that one. How would they qualify? Because it's a fully decentralized exchange built on Ethereum.
Yes.
So how do you catch those weird beasts, I would say, from a nationalist, legalist approach?
Yes, I think that will raise questions, for example, already about territorial scope of application. Do you fall? Do you have sufficient territorial connections with Europe to fall under that European regulation? And also, do you fit in the category? Because indeed, it's not an exchange administered by by one central entity. And I think it's something that is not clear and will give rise to debate.
Well, it's already giving rise to debate, because how do you regulate a protocol which is intellectual property that doesn't fall under a nation state or a conglomerate or member states that unites it as the European Union? So it shows the complexity of what we're dealing with here.
Yeah.
There are some initiatives in the US and the United Kingdom for the regulation of crypto assets, especially given the recent rise. It becomes a really big asset class, I would say. Can you give us some color on those proposals? What's happening outside of Europe?
Yes, very briefly, because also conscious of time, I think UK is doing a kind of consultation because they look at Brexit. There's no equivalence between EU and UK regulation there. So I think they want to do something to have also this area regulated. They may have differences in scope. For example, they do not intend to regulate certain more speculative coins. So that's something that will be interesting to monitor. How will the scope be and the difference in scope? The US has a proposal, the Stable Act, that gave rise to a lot of discussion, and that would require bank licenses for certain issuers of stablecoins, but that is far from clear, and that was also proposed under the previous administration. So to be seen what will come out of that.
And we just talked about the proposed timing for the European Act, the Stable Act. What's the timing expectation there? Do you have any view on that?
I think it's very unclear because it was launched under the previous administration. Yes. So it may be that this is something that doesn't materialize altogether as well, or in some different form.
Or it will at least have a different name.
Yes.
Okay. Now, how does the MiCA initiative tie with those discussions on central bank money? And we're going to get more into that with our next two speakers, but what's your view on that, like the central bank digital currency discussions going on? Can you answer that one?
Yeah, we thought it would be interesting to shortly or briefly discuss CBDC, as there's currently a debate on what the digitalization of money would cause. People have a fear that this could threaten the control of states on money supply, crowd out cash over time, and just create instability. We are curious to see what the relation will be between stable coins, so the type of the private coins linked to currency that will be regulated by MiCA, and CBDC. We wonder whether there could be a policy initiative to promote CBDC as stable coins. The role of the big techs may impact stable coins, while that's not the case, or don't think it would be the case for CBDC. We see that in the Eurozone, the ECB is currently discussing whether they will use CBDC, but there's no final decision yet. Also in other zones, not the Eurozone, but other central banks are considering the issue. We also wonder how it will work. Will private individuals and companies have an account directly with the European Central Bank? How will data protection work? So we actually think there's still a lot of topics for discussion here.
Okay, great. Thanks for that. Our next two, so first of all, big thanks for this introduction. Everybody, we're going to have a plenary question session, and I really love the questions that already came into the chat, so don't hold back and fire there. There's an in-between question from Emmanuel Erdem, who's asking, are we going to get a summary of the main points? So yes, this is being video recorded, and we will, of course, give a write-up afterwards. Give us a little bit of time to write a nice summary. And don't hold back. If you like what you heard here, or you want to chip on those discussions, we love you to share it on LinkedIn and other appropriate social media silos to keep the discussion going. And we'll have the opportunity after the plenary part that you can reach out to our speakers and other people that you will see among the 40 participants that are joining us now to get more insight. So without further ado, big thanks for this great introduction on the upcoming regulation on crypto assets. Now we're going to move to our two next speakers, and we're going to start with Laura from Keyrock. Keyrock, for those, I'm going to let you do 1 minute elevator pitch, but Keyrock did raise 4.3 million euro from Middlegate Ventures and SIX, which is the Swiss stock exchange. So you both have a specialized scale-up partner that will help you grow, and you have a stock exchange, so it seems great. So tell us, what does Keyrock do with that? What do you do, and what do you offer, Laura?
Yes. First of all, I would like to say thank you to Wild and Case for hosting us, also FinTech Belgium for the organization, and well done, Eileen and Willem for the great introduction. I thought it was very clear, so well done. Kiroc was established 3 years ago. It's a young FinTech. We are now 40 employees already. And what we do is we provide liquidity to digital assets. So our clients are, for example, exchange platforms, Binance or Bitflyer, and issuers of assets. For example, Cardano, who's really popular for the moment. And so what we do is we provide liquidity, but the assets on which we provide liquidity are unregulated. It will be Cardano or Ether. They are not considered as financial instruments, and therefore we don't fall under any regulation today.
Okay, that was one of the first questions. Do you fall under any current legislation? Your answer is no.
No. And also in terms of AML,
yeah.
We're not a custodian, and we don't exchange fiat against crypto.
Yeah.
So we also don't fall under the AML directive.
So you found a very good niche to be in, while everything is not regulated yet, that you are in the exception boxes twice already. Okay, I'm going to introduce our next speaker, and then we're going to keep asking questions to both of you. When you answer, you can look at those cameras. It's a little bit unnatural, of course, to answer and look into the audience, but that way the audience gets the full view. Now, Marc Tolede, you are from Bit4You, and as said before, you're doing advertising campaigns in magazines now. So first of all, congrats on that, of going above. You've had a busy week, because we've been reading a lot, and I think you can thank Elon Musk for doing part of the hype around certain crypto assets. But tell us a little bit more. What does Bit4You do offer, and how do you see this new legislation that's coming into effect?
Okay, thank you very much for inviting me today to share my views on what we're doing. So we're speaking about advertising. That's not really advertising. It's advertising for sure. We pay for it, but ever look at it. It's just education. Yeah. We want to educate people because everybody wants to acquire today crypto assets. And the way that they do it is a way that is absolutely uncontrolled. If they want to acquire today Bitcoin, they can go on exotic exchanges in Asia, in United States, in Russia, they can buy. So these people are really at risk because they don't really know what to do, what is the exchange, is it an official exchange, or will I get my money back? Is there anything that could happen, or will I be able to do something? So we try to educate the people, and if you look at the series that we're doing now in the Standard and La Libre, so thank you very much for them for welcoming us also. Yeah. We try to educate the people, to let them know what's the Bitcoin, how to get them, what's the risk, what are the frauds, and we pay for education. So for us, the most important thing is education. Today, our main concern is all the people that go to us and say, oh, you don't do leverage effects. No, sorry, it's totally forbidden. We cannot do that. Okay, I'm going to switch on Binance. Okay, switch on Binance. So for us, the competition is really fierce because there is no borders. We've got Belgian borders, EU borders, but internet has no borders. And when you look at the consumers, we want to protect them. How to protect them is by trying to be responsible. And we are responsible by design. We were founded in 2018. And we said, that's our mission. We want to give an easy and safe access to crypto. So easy and safe means that by design, we were MLD5 compliant by design, because MLD5 is not yet in the Belgian law. So everything that we have done, what on this purpose, try to protect the customers, KYC, sanction list screening, all the origin of funds. We do all the things that we are not obliged to do because the regulation is not yet in place. And I think that's the most important thing. Yes, we pay attention to what we do. We give a lot of warnings. I give a webinar every Friday at 6 o'clock on our website, Bit4You/webinar. And each time I say, it may go up, it may go down, we try to educate the people. I was last week on LN24 with the CFO of Belfius, and we totally agree. The most important thing today is to educate the people, because we cannot impeach them on going on United States website, on Hong Kong websites, on Singapore websites, do whatever they want, risk their money, risk their retirement money. We have to educate the people, and that's our mission.
So it probably shows that this still is an early market. And if you have to explain to the general audience what this product is about, what the risks are, so you're taking up the role of a pioneer. because it's clear that the market is not there. You don't have to explain anymore when we see car advertising or bike advertising how you operate them and under which scheme they're regulated. Yeah, you're still in that phase of the market. Happy to hear that you're doing more than you're legally obliged to do. From what I feel here is that you're really preparing ahead of these new legislations. But it would be interesting to hear how do you prepare yourself and what are the drawbacks in MiCA that you see today?
In fact, as I told you, the competition is international. When there will be a ban, let's say, on exchanges that are not related to Europe, okay, that could be a solution. But for the moment, we cannot ban the access from our EU customers to out of Europe exchanges. So the competition is international. And the way that MiCA is designed is to protect, for sure, not only the consumer, but also the system. And I think the system has got to be protected, for sure. I don't want to see all the banks going bankrupt one day. That's not our... nobody wants that. So it's important to get some protection. But the way that it is done today, I think it's too slow compared to the technology evolution. The technology is evolving at a very fast pace, and we want to keep the competition on. So if we just try to block everything about decentralized finance, new entrants, new technologies, requirements about the size and so on, you will impeach all the competitiveness of the new entrants, the new small companies with good ideas, good projects, and will be just leaving Europe in a zone where the competition could not be as, let's say, efficient as it would be in the United States or in Asia. So what will happen to Europe when you look at the global picture? If you decide to ban the internet access to outside of Europe, that may be a solution, but I don't think that anybody will accept that.
Okay, thanks for that, Marc. I'm going to ask Laura, because we hear that you're educating and you want to help people protect, help those new market participants. Do you see any disproportionate obligations that arise with the former gold plating we've seen in fintech and in more classic banking services?
Yeah, of course. I see three main disadvantages of MiCA. The first one, the first one would be that the fact it's not proportionate to the market. We always, when I participate to seminars, I always hear same business, same risks, same rules. Well, the business model of CASPs and the business models of banks are different, and the way fiat works or digital tokens works, it's also different. And here I believe that MiCA wasn't drafted in a targeted way for the market. And I will give you two concrete examples. The first one is stablecoins. Willem informed us earlier that there was a category for significant stablecoins. But what we see in the market today is already established stablecoins like DAI or Ether. They all fall under the significant category. So why would MiCA create two categories if now all the tokens fall immediately in the same category? And as Willem mentioned, there are more strict rules for the significant tokens. So that doesn't really make sense. And another concrete example, it's more on the operational issue, and maybe Marc, you will have also some technical experience on that, is MiCA. There's a rule on MiCA that exchange platforms need to settle every transaction on the blockchain the same day. This is economically unviable, and also it's not feasible, and I will explain why. The way exchange platforms work, so they perform the transaction real time, but then when it's settled in the blockchain, it's only when the investor withdraw the funds from the exchange platforms. So if now that rule is still existing when MiCA is live, it will mean that there will be higher costs, and also there will be a huge congestion on the blockchain. And who will pay that cost? It's you and me, the investors. So I think that's the first main disadvantage. It's that the fact that it's not targeted to the market. The second one is, well, Willem also mentioned, is DeFi. The pilot regime and the MiCA doesn't even mention DeFi. And DeFi, as you know, has raised a lot of traction recently.
Yeah, maybe explain a little bit more what DeFi is about for those that are new to these terms.
Yeah, so DeFi, it means decentralized finance. So it's autonomous entities. So there's no real legal entity behind, and they work via smart contracts. And yeah, I think that the amount of value that is blocked in DeFi today $39 billion, which is huge. And every week there's new DeFi projects that are created. And the fact that MiCA just ignores DeFi, it could probably means that it's out of scope. And I believe that that will just drive, new players, new fintechs outside of Europe. Yeah. So I think that's the second main disadvantage. And then the third one is the existing waivers for established financial institution. So e-money institution today that have the e-money license, they will be able to issue the stable coins the day that MiCA is live. But that's not fair, because I believe that the same authorization should be for new players and also existing players. So e-money institutions should have the same process than new players. So these three main disadvantages, I think the EU Commission should work and address these points.
So I'll inject some of the questions. So first of all, François is asking what are MiCA, so the markets in crypto assets. That was the main topic of today. So the explanation Willem and Eileen gave earlier on was this upcoming European law, which is named MiCA. So the markets in crypto assets and how to regulate them. I'm going to inject one to you, Marcus. We have a question here from, I think it is Michael Schillig again, who's asking, I have the feeling crypto markets are primarily for younger, tech-savvy people. What about people close to the pensionable age? How do you see that in your customer base and when you give the talks you do and the interactive webinars that you host?
It's very interesting because we got the young techies, but our most important customers are mainly women. But yes, women invest more than men. That's something really interesting. They pay attention, they ask a lot of questions, they read everything. And on the other side, we've got two kinds of customers. The customers that are investing a few hundreds, a few thousand, that are mainly trying to generate an additional income because with the money that they do today on the bank, they're not so happy. And on the as they would have done, let's say, on the stock exchange, but the volatility being higher, that attracts more people that want to take advantage of it. On the other side, we've got people that are a little bit older, that knows about how managing their funds, and they say, okay, I've got to diversify my assets allocation, and they do invest 2 to 5% of their wealth. That's what they are supposed to do. We don't check if it's just 2 to 5% because it's very intrusive already, because each time that they put above a certain amount of money and a certain risk, we ask them the origin of funds, and it's very difficult. But so we learn also all our customers invest, what they do. So most of our big customers are older, for sure, and they're investing on two kinds of strategies. One is a long-term strategy, the one that invested 3 years ago, for instance, in Bitcoin. They invested at 1,000 euro. Now it's 30,000 euro. They made a nice amount of money. They could lose everything at the same time. But if it's just 2 to 4% of your wealth allocation, it's not a big deal, but it could make a real difference. Mm-hmm. And on the other side, you've got people that are mainly the customers of another well-known bank that are coming on our platform just to exchange. They make deals, they try to make what we call scalping. They try to get advantage of each move of the cryptocurrencies. And as I always say every Friday, cryptocurrencies is not made for cardiac people, because you can get 20% and the next day you can lose 30%. For the time being, the liquidity on the market is not huge. Even if it's huge amount, the liquidity is not huge compared to the demand. And the demand being much higher than the offer, the volatility is very, very important. So our customers, mainly the most important one are women, followed by people need retirement, and we've got a lot of young people that are taking advantage of the volatility of the cryptocurrencies.
Okay, and one of the reasons, as you say, the low liquidity, one a whale, as they refer to, very big parties buying billions. And we learned about Tesla last week that in January they bought, I think it's $1.3 billion in exchanged equipment. That's called a whale. They move in. Yes. Because there's limited liquidity, they're pushing the price up themselves. So there's a lot of concern about market making and influence there. What's your view on that?
It's really funny because everybody asked me for 3 years now, it's too expensive. Is it the right time to invest? It's too expensive. You know, when the Bitcoin was at €800, it's too expensive. Should I wait? Or I never give any advice because I'm not allowed to give any advice. The only thing that I say is not the price of the asset, which is important. What is important is the trust that everybody gives into the asset. Let's take another example. Let's say Van Gogh. When you buy a Van Gogh in 1891, it was maybe $1,000. Now it's more than 100 million. So you see that the offer is still the same because you just have one Van Gogh to sell. But the price is going up. And each time, if you tokenize the Van Gogh and you take some shares of the Van Gogh and you wait a bit, and let's say 2 or 3 years later, the price of the Van Gogh is how much? Let's say 150 million. You can take advantage of it. And it's exactly the same thing that we see with this really special asset, which is the Bitcoin, which is considered today as digital gold by all the players. When you look at MicroStrategy that did invest 10% of their wealth. It's huge. So these people are not crazy. When you see PayPal announcing that 24 million people could accept cryptocurrency, they're not crazy. When you see Elon Musk, okay, people can say that Elon Musk is crazy. So show me what you've done. When you want to compare to Elon Musk, show me what you have done. Elon Musk is not stupid. And now that the next big deal would be for sure Apple. Will Apple enter the crypto market or not? And for sure, the more players you will have, the more money you will have stuck into this global store of value, which is called Bitcoin. It could be the Van Gogh. If everybody injects money in the Van Gogh, you got the value of the Van Gogh, which is increasing. But you will always share the same reserve of things against inflation and against the devaluation of your money. That's exactly what they do in every country where you've got a low, got devaluation risk on your currency. People invest in Bitcoin. Have a look at Africa. In Africa, they're much more advanced than we are in Europe. It's crazy. More than 30% in Nigeria are already using Bitcoin for their everyday exchanges because nobody can steal them, because they don't need a bank account, because they've got a mobile, because they can exchange it. You say, yes, they exchange Bitcoin, it's a lot of money. No, it's one Bitcoin. They exchange one Bitcoin. So it's like when we compare to our Swiss neighbors, they say, oh, they've got a huge salary. No, it's not a huge salary. That's a salary in Swiss franc, and everything is related and paid in Swiss franc. So have a look at the references, and that's the most important thing. So value, yes. Price, just to understand what is the good price. I have no answer.
Okay, let's maybe go back to, I was asking about the gold plating. There's also the passporting. If you're allowed to do something in one European country, you're allowed to do it in others. What about the arbitrage in the UK? Like, what's your feeling about where that's going to go?
In fact, what we see today is that there is a competition, regulatory competition. We've got, for instance, MLD5. MLD5 is seen on a certain way in Luxembourg, on another way in France. When you look at the consideration in terms of KYC, have a look at what France has done. It's one step higher than everybody. When you look at what Luxembourg does and accept a token as being a security token, and you've got another regulatory framework in another country that says, oh, it's not allowed, so it's difficult. So the European passport will be very important to give us certainty on what we do. So the most important problem for us is the certainty. And if there is a law, that everybody will apply and stick to the law on the same way. It could be in Luxembourg, in France, in Belgium, in Netherlands. The law should be the same for everybody.
Okay, and a related question to that on taxation. So we have Jaime Finizola asking, how are we going to harmonize that part across Europe? What do you do with the capital gains, for example, which is a lot currently? So any news on that? And I will also extend the question to White in case if they have any view or they want to express themselves with the vote. First, maybe, Laura, you want to answer that one first?
I haven't checked, but apparently in Switzerland, people are now allowed to pay their tax with cryptocurrency.
Okay, but the question is rather, okay, you can now pay in cryptocurrency, which is nice for the government as long as they go up their tax base, or if they hold on to them, will go up too. But what about the base that you tax? Like, for how long do you have to own them for them not to be classified as a speculative transaction? Marc?
In fact, the taxation is, you will see this Saturday in La Libre, a very nice paper about
one of your educational papers.
So we pay to educate the people. That's something French, isn't it? But taxation is really local. So each country has got its own regulations. That's one thing. The second thing is that each sub-region has got its own ways on the way to understand things. But the big categories are what we say in French, le bon père de famille. So you invest, you put it away for many years, and then you take it back, and if there is a gain, you just sell it, and you take the gain on your bank account. So this is considered in Belgium, so far as I know, but always have to check with your tax advisor because law is changing every day, moreover in fiscality. You are considered as a bon père de famille, and there is apparently no taxation on that. If you start trading more actively, there are different kind of things that can happen to you. It's what we call, I don't know the term in English, what we call revenu divers. So it means that you've got a taxation which is on a certain level. And if you do trade with, let's say, AI and robots and very actively every day, it can be considered as professional revenues and taxed as a professional revenue. So what I say to the people is, have a look, ask your tax advisor, ask your lawyer, and ask also the authorities, because most of the time it's ruling. I see sometimes people coming to us and say, okay, I've got 10 bitcoins that I bought a few years ago. So these guys are very happy. And I said to them, listen, go to a compliance officer that will make you a paper so that you are allowed to sell it, and go to the taxation office and try to have a ruling on how the gain will be taxed, because we do not want to take any responsibilities on that. We don't want to take any responsibilities on the origin of funds and so on. It's better to leave it to professionals, and once you got all the papers, you could sell them. It's a very, very common question, because many people do not forget their password. Some of them do, unfortunately.
Okay, great. So I understand if you're lucky enough to have 10 bitcoins, because that's a considerable amount of money if you convert them today at today's value. What's the current value of a bitcoin?
Approximately $45,000 per bitcoin.
$45. So you would have $450,000 if you would exchange those. So if they are considered speculative and you're taxed at above 30%, you would lose it. If you've kept them for many years and when you bought them, they were a very small percentage of your assets, you can justify as bon père de famille, as they will say in Belgium, you were allowed to do that, and it's not speculative.
Yes, but check it before doing it.
But very good. I understand that you do those ads and you repeat the question. You're not liable, and check with the tax authorities. Yes. These things are still uncharted territory, and the opinions might change over time. So secure yourself with the ruling that we have no bad surprises afterwards. Okay, great. Is there any legislation successful in promoting this innovation? Are there any gaps? Maybe Laura, is there anything that you see there that like the upcoming legislation? How do they help or prevent the innovation in everything that's related to crypto assets?
Yeah, I believe it's difficult for the EU to draft legislation that is, in one hand, innovative, and the other hand, it protects consumers. So the EU has done a great work up to now, but I believe there's still a lot of work to be done. But today, MiCA, it's everything but innovative. By excluding DeFi, it's excluding a huge part of the market that exists, and also it will push players to go outside Europe. The same is going to happen with the ICOs in 2017, when fintechs wanted to do the ICOs. They were doing some regulatory shopping. Okay, in which country will we do our ICO? The US and China, for example, it was a no-go. But after they looked at offshore countries, or also Estonia and Malta, and at the end they moved to this country to do ICOs. So yes, if MiCA doesn't change today, it will push away significant and innovative players outside of EU.
Okay, great. We had a question. People are moving to tax havens to avoid those taxes if you have such an amount. But I hear that under Corona, you have to live 180 days a year in another country to apply and to become a tax person according to that legislation, and for the Belgian authorities to accept that. Do you have any news about that? Customers that you know that have tried this or that have moved out for tax reasons? Mark, do you know about any examples like that?
It should be someone who has got a lot of bitcoins for sure, because the incentive has got to be very important. No, I don't have knowledge about such customers, but yes, for sure, it's always a question of amount.
Okay, now the tax authorities are not trying to ban this message. We are having works that just started on the upstairs floor, so I hope that you don't hear the drilling. Laura, maybe if you want to add on top of that.
Yeah, maybe back to your previous question on how to improve MiCA. The crypto assets, it exists since 2009 now, and there's a big know-how. You know, I joined Kirok a year and a half ago. Before I was working in traditional finance, and every day I book 1 hour to catch up with everything that has happened since 2009, and also to make sure I'm up to date with all the developments today. And it's a complex industry, and these policymakers they need also to increase their knowledge about crypto assets. But what is good is that I see my peers in other companies, so compliance officers or legal counsel. There's loads of them that were working in big banks before, you know, like Morgan Stanley, UBS, and that moved to the crypto assets world. So all these people have the knowledge and experience of working in a regulated company, and they are very happy to help the policymakers. So yeah, how to improve MiCA? I think it should be a hand-to-hand work between people who work in the business, like us, and policymakers. And that's the only way we can together create an innovative framework that will push, you know, like new starters to develop innovative ideas.
Okay, Laura, I think that's a very interesting remark you make there, right? Because all the professionals in those crypto asset markets now, they're self-learning on the go. Nobody studied it, has a degree, has a certification, to my knowledge, that you can bring to the national regulator. Maybe question to White and Case, it also applies to you. You also have to follow the markets, feel what's happening, listen to what's happening. How do you feel about that? Maybe if I make the link to GDPR, this was also regulation. A lot of professionals started following training, reading up on this, and it took a few years to become clear how to get certified and what that means and how the regulator will apply fines for those who don't follow the rules. Is this something similar that we need to expect or look to?
Yes, I think to some extent it's similar, because this regulation will really be about bridging the gap between technology, business, and law. So it's not something that you can practice or can work with just in isolation. So working with clients, learning about their business is really key here. And also I think we see even in legal education that there is more and more interest in making the link with technology as well.
Okay. Maybe question to Elena. What is the most interesting parts for you to follow? Where do you learn the most? Is it by reading the legislation, listening to customers, or certain niche news channels that you might want to share with us, which are public?
Actually, listening to them who teaches me most of it, but mostly reading legislation for now, actually.
Reading legislation, so that's the way to stay tuned on what's happening as frameworks that will apply to this market. Mark, you're among those that try to educate. What are your sources? How do you stay tuned? Where do you get your information?
I've got very good lawyers.
You got good lawyers, okay.
And rule number one in our company, we don't do anything if it's not has been approved by our lawyer.
Okay.
That's easy. But the only concern, and I totally agree with Laura, is there might be consultations, but we have never been addressed any questions as professionals. There are not so many exchanges in Europe. I never received any email or any questions about that. And moreover, when you think about our structure, we're a startup. We're not so many people. No, we're going faster. We've got more people. But most of the startups do not have the financial means just to address everything. So the most important thing is to give them also the possibility to grow, because the competition is absolutely healthy for us. But we need to have more consultation, we need to have more interactions. For the moment, for the time being, my impression is for sure we got right, and he do a fantastic job. Our lawyers do a fantastic job, but we feel, and exactly as she said, we're reading the legislation, but we're not interacting. Okay. So we need some more discussions with the people that are writing these laws, because if there is no discussions, and there are very clever people, very brilliant people, but they never have been in a company like we do every day. We see the concerns, we see the competition outside of Europe, we see the evolution of technology. They don't see that. We have to show them what's going on, and that would be I would be so happy just to give my time, even 1, 2, or 3 days a week, to show them what is our business, how we think that the customer has got to be protected. And never forget that. But if a customer is not happy with a Belgian website, they can go on a Ukrainian website. Yeah. It's not so difficult to change .be by .uk or whatsoever.
Okay, great. And Laura, you feel the same about that?
Yeah, but I think for the participants who are online and want to learn more about the market, I would recommend Medium and also Reddit. I don't know, Mark, if you use them, yes. But there's loads of knowledge, crypto knowledge in there that you can read about.
Okay.
So I would definitely,
We have a question. We're going to wrap up and go to the personal reach out that you can all do after this. So that's the last question I'll take from the forum. We have Rosella Nocera who's asking, what about public traded companies such as Tesla, who are now putting a lot of crypto assets on their balance sheets? How, as an auditor or a reporting standard, how is that being treated today in Europe? What happens if the next European stock listed company would do that? Does anybody want to take that question?
In fact, yes.
Go ahead, Mark.
I think we are one of the first company in Belgium to have crypto assets on our balance sheet.
Okay.
It has been a long discussions with La Chambre des normes comptables in Belgium, and they declare that it has got to be considered as an asset. So that's exactly what we do today. And if you invest, let's say, in shares, the company invests in shares or other kind of assets as gold, you've got to declare them.
Yeah, but so they're on the asset part of your balance sheet.
It's on the asset.
But
part.
how often do you revalue them? Because it's
that's the difference between
value.
the difference is between a stock and a flow.
Yeah.
So I don't want to enter accountancy. The balance sheet is a stock, so if you got the value is the value of the day when you're closing your balance sheet.
Okay.
But this value is varying every day. That's
of course. That's although there is limited liquidity.
Yes.
There are markets and there are publicly available market rates for those crypto assets.
For instance, in Luxembourg, you can set up your company and deposit the money for the capital in bitcoins. Yeah. It has been done already in 2017, if I remember well.
So the Luxembourg authorities authorized the capital of a company to be in Bitcoin.
Absolutely. As soon as I've seen that, I said, okay, that's the beginning of the new story. But we know that Luxembourg are very creative and sometimes too creative, but I love them anyway.
Okay, well, it's as always, smaller countries are pushed to be creative to capture the financial system, the parts that larger countries don't want to lose on their tax base. Exactly. So that's, of course, the same history happening over and over again. In conclusion, I want to give the final closing word, I would say, to our speakers, Willem and Eline van Weiden Kees. First of all, again, our big thanks to you. Is there a closing message you want to give or something you learned during our discussion?
I think, thank you. It's an area that is really evolving. I think what we can learn, and also from the questions during the call, that it's a subject that is really alive. And that's it's a great area, I think, to continue learning about with companies and so on. So I think a subject to be followed.
Okay, great. Thanks for that. I'm going to use the last minute here before you all start connecting to each other. You can click on each other's names and to get private discussions going there. To tell you that on the 2nd of March, we have our next session, which is a bit a special one, and I'm addressing all the fintechs in our audience. We're going to help you get more exposure in the press through press relations and press releases, and to attract journalists' attention on the great innovation that you're delivering in the market. And so that's going to be a session for which you can enroll via our website. So keep tuned there, follow our newsletters, and I would like to invite all of you to join the private discussions going on now, and looking forward to reconnect with you on the 2nd of March. So big thanks for all those who've asked questions, and you can continue to ask those questions to the speakers directly from now. So goodbye everybody, and see you soon online in one of the private channels. Bye bye.